Well, let's get started, guys. It's 12:04. I think we've let everybody log on. My name is Joe Massey with Castle & Cook Mortgage, and my job is to be a resource for you on any type of permanent financing that you or your buyers need. So primary residence, second home, investment property. We do conventional, FHA, VA, USDA, jumbo loans, investment property cash flow loans. So just about any type of long-term financing, that is what I am here for. And my co-host, Mr. Jared Patterson, who are you?
Well, thanks, Joe. And guys, if you're not using Joe, you should be. He is one of the best in the business, not just from just a personality standpoint. Everything he tells you, he does. He calls your clients, calls agents when you're trying to get a deal closed, so that they know that that the loan is solid. So, I'm first lines title. I've been in the title world for 5 years. I've been in the real estate world for 30 years. I was you for over 22 years in Pennsylvania and sold over 800 homes in my career. So like Joe, my job is to be a resource with you. I talk to a lot of agents who have a lot of goals. And so I love sitting down and let's figure out how you can achieve your goal, because you can have big goals, but if you don't have measures on a daily, weekly, monthly basis to see how you're achieving those goals, then they're most likely going to be unachievable. So let me help you and give you some ideas and ways to grow your business. Use me as a resource.
Absolutely. And I will echo what Jared said. If you're not working with First Alliance Title, you should be. I've worked with every title company in Colorado, I think, certainly every title company in Denver, and First Alliance is head and shoulders above in their service level, their pricing, their convenience. Everything they do makes the transaction really easy for the agent, for the lender, for the buyer, and the seller. All right, let's jump in here. Can you guys see my screen? Give me a thumbs up. Great. So what we're talking about today are VA loans. So what is a VA loan? VA guaranteed home loans are made by private lenders such as Castle & Cook Mortgage, other banks like Wells Fargo, Chase, mortgage companies, and these loans are made to eligible veterans for the purchase of a home which must be for their personal occupancy, and we're going to talk about that quite a bit. And the VA guarantee means the lender is protected against loss if the veteran fails to repay the loan. So that guarantee replaces the protection that we normally receive by requiring a down payment or by requiring mortgage insurance. And this allows the veteran to obtain really favorable financing terms. So in layman's terms, what does that mean? VA loans are for eligible veterans and active duty service members to buy or refinance a primary residence. And there are some excellent benefits to a VA loan, but there are some requirements and restrictions. And we're going to dive into all of that today. All right, so what are the big benefits? Number one, 100% financing. This is a true no money down loan program. All right. Now, often when you have no money down, you have to have a big dollar amount that you pay every month for mortgage insurance. So VA, there is no mortgage insurance, which is really cool. And the seller can contribute up to 4% of the contract price in closing costs. You can use VA to purchase a home or to refinance an existing home that you already own. And all residential property types are accepted, including multifamily. So that means single family residence, condos, townhomes, duplex, triplex, that's 3, or fourplex. All right, so any type of residential property. And this is a big one. This is new. There are no loan limits. So you can have somebody that wants to buy $1 million home, and as long as they were in the military and have VA benefits and they can qualify for a payment on $1 million, they can buy that property with no money down. So that no loan limits is a really, really good benefit, especially as home prices continue to increase here in the Denver area.
Joe, did you say that's a new benefit? Wasn't it? I thought at one point it was capped based on sort of the individual market values. Is that no longer the case?
You're correct. You're correct. It did used to be capped based on like the county loan limits, similar to conventional. And as you went above that county loan limit, there was a formula that we had to plug in that the veteran would have to make a down payment. So for example, the county loan limit in Denver right now is $816,500. In the past, let's say you wanted to do a VA loan on $1 million property, you would have to make a down payment, which was half from $1 million to $816,500, the veteran buyer, the VA buyer, would have to make a down payment of half of that difference. Now that is no longer the case. So it is new-ish. It's been about 18 months that's been the case. But it removes that calculus of, hey, we're going to buy something that's bigger. How much down payment do we have? And it would vary, right? If you got the property under contract for a higher dollar amount, you would have to make a higher down payment, and that is no longer true on VA. So this is a really nice benefit.
Cool.
We closed an over $1 million loan up in Boulder last year. Yeah.
Yep. So good question, Luke. I'm glad you asked that. Now let's talk about a sample transaction. So VA benefits on a purchase. So this is a real settlement statement. This is from, 2 years ago, I think it was. So I've removed all the personal information, of course. This is a property in Englewood, and you see the purchase price here, $173,000. And we gave them a new loan for $173,000. So true, no money down loan program. Interest rate, super low. So the interest rate on VA is always going to be the lowest available. Now this is old. This is not as of today. As of today would be right around 6.75%. And depending on when you're watching this, if you're watching the recording, give me a phone call. We'll talk about where interest rates are on any given day. But as of today that we're recording this, which is June 6th, would be right around 6.75 for a VA 30-year fixed. And down here you'll see no mortgage insurance. All right, so mortgage insurance would generally be listed right there. And on a VA loan, there is no mortgage insurance. And the seller can pay, again, up to 4% of the contract price towards the buyer's closing costs, or the lender can even pay that. So in this example, they did have seller paid closing costs. And you'll see the client actually got $933 back at closing. Now, when they went under contract, they had to put down $1,000 for their earnest money. With the seller paid concessions, the seller covered all of their closing costs, and they got $933 back at closing, meaning that it cost them $67 to buy this house. So $67 that they had out of pocket to close on this transaction, that's a pretty good deal. I don't know a lot of other places that you can buy a house for, the cost of a Big Mac, it seems like. Nobody laughed at my joke. It's because Big Macs are going up. I'll edit that. I'll edit that out of the recording.
No, you definitely should keep it in. I don't know if a Big Mac costs $8 or $9 at this point, though.
In this particular scenario, this client bought a house for $67, right? There's really no other loan program that you can do that. Maybe if you structure like a CHFA loan, down payment assistance, well, even that, you have to put at least $1,000 investment from the buyer. So really, this is the best way that a client can purchase with really, really low money down. So now let's talk about if they wanted to take cash out of a property. So they've bought a home, value has gone up, and they want to take some cash out of it. You can use your VA benefits to take out as much as 100% of the equity in the home. So the big benefit there is, again, really low interest rates on cash out. There is no mortgage insurance on cash out. And that will allow, let's say they bought it for $300,000 and it's gone up to $400,000. They can do a cash out loan to get all of that $100,000 equity out of the property. So VA allows you to take up to, again, 100% of the equity of the property out. So they would, pay off that existing loan of $300,000, and they could take cash out up to that $100,000. Now, obviously, some time would occur between, when you buy it for $300,000 and when is it worth $400,000. But it's a great benefit, especially in the current market where properties are still increasing. So after they've owned it for 2, 3, 5, 7, 10 years, they may decide to take some cash out to pay off other debts. So VA is great for that as well.
Well, buy your first investment property.
That's exactly right. That's what I have a lot of clients do, is they take this example of $100,000 cash out and go use that to buy an investment property, and then now they've got that property going up in value and they have 2 properties increasing. So that's a great strategy right there, especially for veteran buyers that can take a lot of cash out if they decide they're going to stay in that home. Yeah.
Sorry, I'd love to interrupt again. I know I'm bugging you a lot.
No, okay, go ahead.
So my question is, how many times can you, first of all, how many times can you use the VA loan? And second, can you explain, I am relatively new. Of course, I just finished my first listing, hooray for me. But um, I'm still pretty new. I just got my license back in July of 23. So I'm actually curious about what the benefit of the mortgage insurance, mortgage insurance versus mortgage insurance, because as initially I would assume that to be like a benefit, I suppose.
Yeah, so let me answer the first question. You can use your VA benefits as many times as you like. Now, you can only have one VA loan at a time, and there's some tiny little nuances to that every now and then you can have two at the same time, but 99% of the time you can only have one VA property at a time, but you can reuse those benefits. So if I buy a home, let's say I buy property number 1 with VA, and then I sell, and so I no longer have this property, I can buy property number 2 with a VA loan. But if I'm going to keep this property, then I could not use VA on the second property. So you can use your VA benefits as often as you like. If you're paying off this VA loan, then you can use those new benefits on property number 2. And then could you repeat the question on mortgage insurance? I'm not sure I understood what you were asking there.
Oh, absolutely. I know that, again, this is probably a completely dumb question, but can you explain the benefit of no mortgage insurance? Because just initially, I would just assume based upon mortgage insurance that it would be something that would be beneficial. So could you explain why it is beneficial to not have it?
Yeah, so mortgage insurance, the benefit of mortgage insurance on a conventional or an FHA loan is it allows you to purchase the property with less than 20% down. But there is a cost to it, and that cost is going to range anywhere from, $150 to $400 a month. All right. And so if you don't have a down payment and you're doing a conventional or an FHA loan, this money gets added to your monthly payment and increases your monthly payment. If you have VA benefits, you can have no mortgage insurance, and so you do not have to pay that $150, $200, $300, $400 a month. So it allows the veteran to qualify for a lower monthly payment with no down payment. And
allows them to qualify for more house.
Right.
Do the math. That number in itself is, probably what, 85, 90,000 bucks?
Yeah.
Exactly. Oh, I see. Okay. Yeah. Sorry. I was just like, oh, that sounds like a benefit.
Yep. No, good question.
I guess anytime I hear the word insurance, I'm like, oh, that sounds like a good thing.
It can be, because it allows you to purchase with less money down on conventional or FHA, but there is a cost to it on a monthly basis.
Okay, and sorry, last question for now. Is there a type of residence, like a residential property, that does not, like, you cannot get a VA loan with?
Not really. I mean, I would say a condo-tel, right? So if you want to buy a property in Keystone, right? You've been to Keystone or Vale as an example, and you go into, a condominium complex, and they've got a front desk and they've got a restaurant, but somebody actually owns that individual unit, unit number 16 on the 3rd floor. That is a condo-tel, not a true condominium. So it's like a hybrid between a condo and a hotel. You cannot use VA for that. But otherwise, let's go back just a little bit. You can use it for single family home, condo, townhome, duplex, triplex, fourplex. So unless you're doing something really nuanced in the mountains for like a condo-tel, or, there's condo-tels in Denver at the Four Seasons and at the Ritz-Carlton, you cannot use VA for those. But outside of that, just about any type of residential property.
Okay, yeah, I didn't even know condo-tel was a thing. So.
Yep. Okay, cool. Great question. All right, so let's keep going here, and let's talk about, this is something that's important for VA buyers. Right now, we touched on this earlier, interest rates are high, right? Interest rate today, 6.75%. Again, if you're watching the recording, give me a call. We'll talk about where it's at on any particular day. But when interest rates go down, you can do a streamline refinance. So number one thing is there is no appraisal required. We go off of the prior appraised value on the property. There is no verification of income or assets, right? You already have a VA loan. You're already making the payments. interest rates go down, we are not going to ask for paycheck stubs. We're not going to ask for bank statements. The only requirement is simply a credit report and a verification of employment. So you still have great credit and you still have a job and you have income coming in. That's all that it takes for you to qualify for a VA Streamline refinance. Closing costs are included into the loan. And in this example, the customer had an interest rate of 4.25% and their payment was $1,355 per month. You can see their new interest rate up here is 3.5%. Their new payment is $1,215. So it saved them 0.75 of a point on their rate and saved them $140 per month. And it was 14 days from beginning to end. From when they initially called and said, hey, Joe, I'd like to lower my rate, to the closing day was 14 days. So if you have veteran buyers who are purchasing a property right now, interest rates again are high. When rates come down, they'll be able to give me a phone call back and refinance really, really easily to a new lower interest rate. So really a nice benefit again on VA. So let's talk about property types. And this was a question we had earlier. You can buy a single family home, multifamily properties such as a duplex, triplex, or fourplex, but you must live in one of the units. So you can't just say, hey, I found this triplex, I'm going to buy it and put 3 tenants in it. Can't do that. You've got to live in unit A, B, or C, and then you could rent out the other 2 units, okay? You can purchase a townhome with VA. You can purchase condos, but the condo must be on the VA approved list, and we're going to talk about that in a few minutes. This is the link to the VA approved list. So has anybody ever seen inaccurate information in the MLS ever?
Never, never.
It's always perfect, right? So up in the top right corner, you guys know where it says financing type, and it's often checked cash, conventional, FHA, VA, and other. Well, just because the listing agent has checked VA and it's a condo, that does not necessarily mean that it's on the VA approved condo page. And so you want to go to this link here and you want to type in the name of the condo, and it'll bring up a little window, and you're going to look at the condo and you're going to look for this icon, accepted without conditions. That means that the condo complex, the homeowners association, has submitted their information to the VA. It's been received. The VA has reviewed it and they've given the thumbs up and said, yes, this is a good homeowners association. We are happy to provide loans in this complex. Now you may also find this where it says HUD accepted. And what this means is they submitted the information, but there was something wrong. It was not approved because they didn't have enough reserves or they didn't have sufficient insurance, or the most common reason is the paperwork wasn't filled out properly. So if you're looking on the VA, if you're looking on the MLS and you're going to show 5 different condos to a buyer and all of them on the MLS say VA approved, go to this link here and cross-reference it and be sure that it actually is VA approved. Because if you show 5 condos to a buyer and 4 are approved and 1 is not approved, which condo are they going to fall in love with? The not approved condo. Every time. Yeah. They're going to fall in love with the one that they actually can't buy. So you would not want to show them that if it's not on the approved list. So really an important nuance there. Make sure you are checking that before you take any of your VA buyers out to look at condos. So
take a look at it before you list properties too.
Yeah, absolutely. Don't be the guy that's putting inaccurate information into the MLS.
Exactly.
So next one here. Requirements. All right. So number 1, this is not for everybody. So for example, I was not in the military. So as much as I know about VA, as much as I like VA, I cannot use these benefits. Now I can do loans, even though I wasn't in the military, but I cannot qualify for a VA home loan. You must be an active military member or an honorably or general discharged veteran.
Hey, so I had a question. My little brother is VA. It's kind of why I got into real estate.
Mm-hmm.
So my question, it might be a dumb one, but whatever, I'm going to ask it anyway.
Never a dumb question.
Not at all.
Who can use a VA loan?
Any veteran or a surviving spouse of a veteran.
That's
and we're
what
actually
I thought. He was telling me he thought that it could be immediate family members, and I was like, that doesn't sound correct, but that'd be awesome.
No, nope. And we are going to touch on that. And I guess I should say any veteran who is either A, in the military or honorably or general discharged veteran. If you were court-martialed and kicked out of the Army, you cannot use your VA benefits.
That totally makes sense, actually.
Yeah, I did run into that one time. A guy called and we asked this question, did you ever serve in the military? He's like, yeah, I sure did. Tell me about that. I said, oh, you could use a VA loan. And he's like, oh, let me give you all my information. So I plug it in. I said, well, it says you're not eligible. He goes, oh, well, I went AWOL and I was kicked out. I was like, oh, yeah,
Oh no,
you're not going to be able to use
not
it.
qualified.
Yeah, you're not going to qualify. He was a really nice guy.
Sorry.
We got him an FHA loan, but yeah, VA did not work for that situation.
Yeah, I had quite a few through the years clients that weren't eligible for some reason or another.
Mm-hmm.
So, it happens.
It does. And we touched on this earlier. If you were dishonorably discharged or court-martialed and lost and kicked out of the military, you would not be able to use those VA benefits. You must occupy the property. Very important. You have to live there for a minimum of 12 months. The veteran will pay a VA funding fee, and we're going to talk about that in a moment, and that is financed into the loan. And then you have to qualify under normal loan approval guidelines. You have to have good credit. You've got to have income to pay the payments. You've got to have assets. And of course, we're going to do an appraisal on the new house, which is the collateral.
Sorry, just to interject here one more time. I'm so sorry.
Okay.
In regards to the last screen, that one right there, what if they initially were dishonorably discharged, but they got the status of that changed to general discharge?
Yeah, so we are going to ask the client for their DD-214, and every veteran has this form. This is the document that they get when they're discharged from the military. And then if they're an active military member, they're going to have signed orders, and we're going to request that because they're not going to have a DD-214 if they're still in the Army or Air Force or Marines or the Navy. They're going to provide either the DD-214 or the signed orders to the loan officer, to me, and then we are going to go to the VA website and request a certificate of eligibility, and that confirms that the borrower has eligibility for their VA benefits. So in that example, if they were dishonorably discharged, but that has changed, we would ask the veteran for that DD-214. We're going to go out to the VA website. We're going to request that certificate of eligibility. If the VA says, yes, they're eligible for VA benefits, fantastic. We're going to move forward. If the VA says, no, they are not eligible for VA benefits, then we cannot move forward on a new VA loan, and the veteran would need to work with the VA in order to get that updated. Now, an important point, just because they're eligible for benefits, that does not guarantee a loan approval. So I had a client one time, and he had a foreclosure like 2 months prior. So it was, let's say it was March, and now he's calling me in May, and he's like, hey, here's my DD-214. I'm an honorably discharged veteran. I want to use my VA benefits. And I pulled it up, and sure enough, he had eligibility for VA benefits, but he had a foreclosure 2 months prior. So while he did have VA benefits, he did not qualify for the loan because he just had a foreclosure. All right, so just because they're eligible for benefits does not guarantee a loan approval. We're still going to look at their credit, their income, and their assets.
What's that, 2 years? After
outside of a foreclosure is 2 years on VA.
Yeah.
Yep. Now the veteran must occupy the property. So VA is for primary residences only. And I would really caution you guys, do not try to skirt around the rules with this one. All right. Violation of this can risk the veteran's benefits, and violation of this can risk your license. So if they say, hey, I really want to use my VA benefits to buy this investment property, well, you know what, unfortunately, you can't do that. You do have to live there. Well, but I'm not going to tell anybody, and I don't want you to tell anybody either. I'm going to say that I'm going to live there, but I'm not actually going to move in. That's called mortgage fraud. And I would highly, highly encourage you to not participate in any mortgage fraud. The VA funding fee. All right, so we spoke earlier. There is no mortgage insurance on a new VA loan, but the VA must be compensated in order to build up reserves for any potential losses. And the way they do this is with this VA funding fee. And there's two types. There's first-time use and subsequent use, and there are variations on that based on how much they're putting down. And if the veteran receives any type of disability, they are exempt from that VA funding fee. So this is a kind of a busy chart, but on a purchase loan, when they are getting their, when they're using their benefits the first time, the VA funding fee is 2.15%. And then if they sell that property and they're using those benefits again, and this is with no money down, the VA funding fee would be 3.3%. If they're putting down 5% or more, it's 1.5% for the first time and subsequent use. If they're putting 10% down, it's 1.25% for the first time or subsequent use. There are some variations if they were in the reserves or the National Guard versus regular military. And cash out loans, you have the same thing, 2.15% for first time, 3.3% for subsequent use. And if they do that VA Streamline, 0.5% is the only charge for that VA funding fee. And then if they are disabled, 0%. So if they are receiving any type of VA disability pay, and that'll be on that certificate of eligibility from a few screens ago, right here, this will tell us, do they have to pay a funding fee?
Sorry, I just want to interject one more, probably one of 1,000 times.
Mhm.
Anyways, so I noticed you just said that if they have any type of disability, then it's 0 for the funding fee, correct? So how does the amount of disability that they're getting in, does that factor into income or assets, or does that affect the loan whatsoever?
It does, yes. So if they're receiving that income, we'll give them credit for that. So let's say they're receiving VA disability pay of $1,000 a month. That is $1,000 a month of income that helps them qualify.
Okay, good to know. Thank you.
Absolutely. All
Great
right.
question.
So next one here, usually the VA funding fee is going to be financed into the loan. So let me give you an example. Let's say we have a $400,000 purchase price. At that first time use of 2.15%, that VA funding fee is $8,600. So the base loan amount is $400,000 plus that funding fee for a total loan amount of $408,600. Okay. Now the veteran can also pay that funding fee out of pocket, or the seller can pay that funding fee with the seller paid closing costs. But here's why this is important to know. If you buy the property for $400,000 and you have a loan amount of $408,600, they are upside down by 2.15% right out of the gate. So if you're working with the veteran and they say, hey, I'm going to buy this property, I'm only going to keep it for a year and then I'm going to sell it. Well, is that property going to appreciate enough for you to be able to sell it in a year and have enough proceeds to pay commissions, pay off the loan, etc.? So it's important that the veteran understands on day one, they're upside down in this scenario, and they need to make sure they're going to keep this property for 3, 5, 7, 10 years to give them enough time for this purchase price to increase to, whatever, $500,000 value. So when they sell it, they've got enough proceeds to pay off that increased loan amount. So if they're planning to keep it for a very short period of time, this may not be a great idea. Qualifying for a VA loan is a lot like any other loan. All right. Number one, we're going to need income. We need to see they've got a 2-year work history or 2 years of self-employment. Their debt to income can go up to 50% or sometimes even greater, depending on how much residual income they have. Assets, generally we want to see 3 months reserves if they're doing no money down. Now, if they've got really, really high credit, you may be able to get them approved with no reserves. But let's say they've got lower credit, like a 640 credit score, they're going to need to have some reserves in order for that loan to be approved. And if they do decide to make a down payment, that can come from savings, gift funds, 401k, IRA, just about any type of verifiable source works for down payment. Credit, they need at least that 580 credit score with no mortgage lates in the last 12 months. And the appraisal, the property must be valued at the purchase price or higher, and it must be in average or better condition with no safety or soundness issues. So it's important that the property be, in average condition. So let's talk about VA appraisals. So number one, time frame really depends on the market. All right. So it's ordered through the VA. And right now it takes approximately 7 to 10 business days, but that can vary significantly depending on the area, depending on market demand. I had one earlier this year that was in Evergreen, and it came back in 3 days. I also had one earlier this year that was in Canyon City, and it took 4 weeks. So it just depends.
I've heard it's 10 days once the appraisal has been ordered to get that back. Is that accurate, or is that just kind of a random number?
No, it depends. Again, I had one in Evergreen that came back in 3 days. I got a VA appraisal last month that was in Henderson, I think, and it came back in like 4 days. So it's market dependent. Some areas there's a lot of VA appraisers, and right now they're really bored, so they'll pick up the order and do it right away. Other areas, there's not a lot of VA appraisers and it takes longer. Like the one I had in Canyon City, it was 4 weeks. And we called the VA and they just said, yeah, sorry. So we just had to talk to the listing agent and talk to the seller and say, hey, this is what it is. It's totally outside of our control. And they understood. The seller was actually also a veteran. And he said, hey, no problem. We're going to extend the contract. No big deal. Okay.
Thank you.
Yeah. The cost for a VA appraisal, this has actually been updated. It is now $850 for a single family residence. And if there are any repairs needed on the property, the appraiser will often have to go out for a reinspection, in which case they charge $200 for that. And speaking of repairs, the VA does have minimum property requirements. So people call me all the time and they say, hey, Joe, the property's got a broken window. Is it going to qualify for a VA appraisal? And I say, hey, I'm very polite. And I say, hey, that's a really great question. I'm not a VA appraiser. I can't answer that question. I don't do property inspections. The VA appraiser gets paid to go out and do that and make the determination of, is that property in good condition? So it is ultimately up to the appraiser to determine if the house is safe, habitable, and meets the minimum property requirements. So one thing you can do if you're looking at a property or looking at a listing is you can go to that link right there. And that is the minimum property requirements for VA appraisal. And it's a really good 20-page document that will tell you absolutely nothing and answer absolutely zero of your questions. All right. What it really says, it is up to the appraiser's discretion to determine, is the house safe, habitable, and meets the minimum property requirements. So you can go read through that. It will cause a lot more questions than it's going to answer. And the big thing I tell folks on VA is, hey, the appraiser will go out there, walk through the property, look at it. If it seems safe, you're probably okay. If it seems to be in good condition, you're probably okay. If you've got paint peeling off the wall, probably not okay. If you've got broken glass laying around the house, probably not okay. If the smoke detectors are chirping because the batteries need to be replaced, probably not okay. So just look at it and say, hey, do I think this house is safe, habitable, and meets the minimum property requirements of being a habitable, safe, and sound property? You're probably okay. But the appraiser will tell you if you're not, in which case the seller can make those repairs, and then the appraiser will go back out for that reinspection. Continuing on VA appraisal guidelines, I would always ask, can the home be occupied immediately? If yes, that's a good thing, right? Does it have functioning utilities? If yes, that's a good thing. Does it have the requirements of living space? If yes, that's a good thing. That would be defined as, does it have bathrooms, kitchens, egress windows, functioning windows, all right? Do you have peeling paint for a property built prior to 1978? Hopefully that is no. If you have yes, that's a problem. Do you have exposed wiring? Do you have broken windows? Do you have GFCI outlets? Do you have problems with your smoke detectors? Hopefully there is no exposed wiring. Hopefully there is no broken windows. Hopefully, yes, you have GFCI outlets. Hopefully, yes, you have smoke detectors and also CO detectors. All right. And the way I describe it, if I go into the property and I take a 2-year-old toddler and set them down in the middle of the house and they can run around, are they going to be safe? If the answer to that is yes, you're probably okay. If the answer to that is no, they're going to step on exposed tack strips. They're going to fall down the stairs because there's no handrail. They're going to pick up broken glass from the window in the back. If the 2-year-old toddler that you would put down in the middle of the home, if they're not going to be safe, you're probably not okay. All right. But again, I'm not an appraiser. When the appraiser comes out, they'll tell you what repairs you need to make. Now, the loan process, let's talk about this. So number one, the client would call me and apply for a loan and get pre-qualified and then pre-approved just like normal. They're going to provide, as part of that pre-approval process, their DD 214, or if they're in the military, they're going to provide their signed orders during that process, and we're going to get that certificate of eligibility. Then we're going to give you that pre-approval letter. They're going to go out and you're going to take them out and search for homes just like normal and get them under contract. Then you're going to complete the home inspection, and then we're going to complete the appraisal. Then you're going to do that final underwriting and get your final clear to close. Now, I put here in big red letters, you need to be aware of non-delegated VA lenders. And you may have never even heard of this. I bet Brandon has, but maybe nobody else has heard of this. So being a VA delegated lender, so my company, we are a delegated lender. What that means is we meet certain criteria with the VA that we can approve, close, and fund a loan without having the VA look at it. Now, other lenders don't meet that criteria, and that's what's called a non-delegated lender. So you would apply for the loan, the lender approves the loan, and then if you're non-delegated, they have to send it to the VA Service Center. And the VA Service Center is then going to underwrite it. They're going to go through it with a fine-tooth comb. They're going to look at it, and then they're going to write the lender back and say, yes, this loan is good, you're okay to move forward, or no, this loan is not good, you're not okay to move forward. Now, here's the challenge with that. If you've ever sent anything into the VA, it can be a little bit of a black hole. And so if you're working with a non-delegated lender, once they have that loan approved and they have to send it to the VA, it may be as much as 10 to 14 days before the VA completes that underwriting and sends it back. All right. So a non-delegated lender can add a lot of time to your transaction. And let's say you're trying to close in 2 weeks or 3 weeks or a month. If they need an extra 15 days, that can delay your transaction, potentially cause havoc that your transaction may fall through, or you may have an upset seller or buyer. So that's something that we take a lot of pride in at Castle & Cook, is we are a delegated VA lender, so we don't have to send our files to the VA prior to closing.
How would I identify a non-delegated VA lender?
You would ask them. So if somebody sends you a pre-approval letter, here's the way the conversation would go. Jared, you be the loan officer. I'm going to be the real estate agent. Hey, Jared, it's Joe Massey at, XYZ Realty. I got your pre-approval letter here. I have a handful of questions. What's your turn times? How long does it take to get an appraisal? Have you verified everything on the buyer? Jared, are you a VA delegated lender?
Ooh, unfortunately, I am not.
Okay. So that's the answer you don't want. Jared, are you a VA delegated lender?
I am.
Outstanding. That's the answer you want. Now, here's the third one. Jared, are you a VA delegated lender?
Ooh, I don't know.
That's your biggest one. That's the biggest problem that you don't want to hear, because that tells me that Jared may not have a ton of experience in VA loans if he doesn't instantly know the answer to that question. So the three answers you're going to get are yes, we're delegated, no, we're non-delegated, or I don't know. The only one you want to accept is yes, because if they're non-delegated, it's going to take longer. If they don't know, that means that Jared, while likely a really good guy, may not be the best person to get you through to the closing.
Take a look at the next
I
offer.
should just use Castle and Cook then.
That would solve a lot of problems. Yes. Yep. Brandon, did you have something?
I said just look at the next offer.
Yeah. If they're not delegated, that's a problem. Or if it is your best offer, you can say, hey, you know what? We really like your buyer. You seem like a great agent. I'd really like you to work with my lender. Call Joe over at Castle & Cook Mortgage, and then talk about the benefits of working with us because we're delegated. We'll close the loan fast, et cetera, et cetera. So after you get that final approval, and if you have a non-delegated lender, you've got to go to the VA and get their approval. Then you get that clear to close. Then you're going to have the closing just like normal. Our average time frame for VA is 28 days. And it's not because we require 28 days. We're actually done about 11 days early in that situation. But the reason it takes 28 days is because most contracts are somewhere between 25 and 30 days. So we track our VA contracts really closely, and the average closing time frame is 28 days. and our average clear to close time frame is 17 days. And that is not with any rushes or any rush fees or anything like that. So we're always done 11 days earlier than that contract date. Industry average, let me erase my notes here, 45 days. So the average time to close a VA transaction is 45 days. So one thing that we offer is we can shorten that time frame significantly to make your offer really, really competitive. So back to that phone call where Jared is the lender, I'm the real estate agent. Hey Jared, how long is your time frame on a VA transaction? How long would it take you to get us to the closing?
I'm taking about 42 days right now.
Okay. That is a red flag that might make me want to call the next offer, right? So again, Jared's likely a great guy. Maybe his company doesn't have the support necessary for you to close in 30 days. So you want to make sure you ask that question, discuss that with the lender, and then write your contract appropriately.
And likely you'll probably not get a 42-day answer because no one's going to tell you in their right mind it's taking them 42 days to close. They're probably going to BS around that topic and say, yeah, we're pretty good. We can get it done in time, right? So I would just say be very cautious on the responses that the VA lenders are providing. And you can kind of nitpick out of that and take it as your will. But yeah, you'll never get we're like 90 days, no big deal.
Yeah.
It's probably like, hey, I don't know, but we're doing it right or something like that, so you won't have, if like, for example, Joe's probably gonna be like, hey, we're doing it in 11 days. He knows his numbers.
Yep.
That's what you need to be like, that's a green flag.
Yeah. If the math gets fuzzy, I love what you said, Brandon. If they're like, well, we should be fine. It's all okay. That's a red flag. If you like, so Jared, let's swap. You ask me, you be the agent. You ask me how long it's going to take.
Joe, hey, can you tell me how long it's going to take you to close this loan?
Absolutely, Jared. Our average clear to close on a VA transaction is 17 days. Our average time frame is 28 days because all of our contracts are between 25 and 30 days. How long do you need for your contract? And I'll make sure that I can accommodate that. All right. Whereas now ask me, and I'm going to be a bad lender, so I shouldn't even put this on the recording. This is probably what will get picked up on YouTube. Not a bad lender, but not a very good lender. So ask me again.
Flip that.
Yeah.
Hey, Joe, how long does it take you on average to close your VA loans?
How long is your contract?
My contract's 28 days.
That'll be fine. We do a really good job here. I wouldn't worry about it. But worst case, if we have to extend, I'll call you, and I'm sure the seller will be fine to extend if we need to do that. All right. You guys notice any difference in those two conversations? Which one instilled more confidence?
Pitch of voice, pretty obvious.
Yeah. So Brandon's exactly right. Nobody's ever just going to say, oh yeah, it's 45 days. You're going to start getting that fuzzy answer, and that's where it may take longer.
Yeah. And hey guys, from our perspective on the title side is we love those lenders that can get us the numbers in all their docs at day 17 versus those lenders that all of a sudden we're getting it at day 26 and we're closing 2 days later.
Yeah.
Talk about putting the stress on.
Absolutely. So just like that little role play that we just did with Jared, these are questions to ask the VA lender. Number one, how long have you been a lender? How long have you been with your company? How many VA loans have you closed in the past 12 months? How long is your VA appraisal turn time? Are you a delegated VA lender, right? If you get uncertainty on any of these answers, that should be a really, really big red flag. Now, let's talk about the benefits to agents. Number one, VA is pretty easy to prospect, right? And I'm going to pick on Brandon. He obviously was in the military, spouse is in the military, probably does a lot of work with the VFW, with other veterans. And something that I've noticed with veterans, they oftentimes have like communities that they're involved in, right? Hey, we're going to do a veterans car rally. We're going to do a veterans airplane show, right? So if you have connections to the military, it can be really, really easy to prospect and network within that group. The other big benefits, this is a normal 30-day transaction time with us, right? Some lenders, it is an average of 45 days. Other benefits, it's really similar to FHA. So most homes in the metro area are going to qualify. And then my favorite point, the buyers are absolutely thrilled after closing. So let's think about this. They're going to get a loan with no money down, no mortgage insurance, and a super, super low interest rate. So the last benefit, which is really, really important. So I think all of these are benefits, to the client, but a benefit to you. The number one reason why you should focus on VA buyers, referrals. All right. In my career, 100% of the VA transactions I've ever closed, I've gotten at least one referral within 90 days of that closing. And the reason being, clients got no money down, no mortgage insurance, super low rate. The client is really, really happy. And so you have a really, really happy client who hangs out with other potential VA beneficiaries. Who are they likely to tell? Everyone. All right. They're going to talk to all of their friends, all their family, and they're going to say, you know what? Brandon did a great job for me. You got to call him. Our loan guy, Joe, he did a great job for me. You got to call him. So Brandon, let me ask you, would you agree that you get a lot of referrals from VA transactions?
Yeah, absolutely. And then they move every 3 years. So
that's right.
You get more turnover. They're reliable. They're straight to the point. They don't waste your time. I would say majority. But you have to respect where they're coming from and how they do things. Sometimes it's like at a moment's notice, you got to drop everything. They're calling from Korea, midnight, whatever. You know what I mean? There's some hoops to jump through, but they're amazing clients, people to get into.
So the very last slide here we've got here is everything I do. Conventional, FHA, VA, USDA, investment properties. Obviously, VA is what we're talking about today. Purchases, refinances, first-time buyers, repeat homeowners, second homeowners. Any final questions, guys? All right, that is everything I wanted to talk about. So before we log off, Jared, remind us who you are and how you can help us.
Hey guys, Jared Patterson, First Lines Title. If you're in the market, going to be listing some properties in the near future, let's reach out. Let me help you out. Let me help you grow your business. I have great flyers on a weekly basis that help you stay in touch with your clients. I've got a net sheet. The QR code on the slide will allow you to download that. And also there's a QR code to download my contact card to add me to your cell phone as a contact. And I'd love to sit down and see how I can help you grow your business.
All right, Jared, thanks so much. And anybody out there that has not reached out to Jared, I would highly, highly encourage you to. He has done a ton to help my business, and he is obviously the sponsor that helps bring all this information to you guys. So please give him a call. Let him know about any of your upcoming listings. Reach out to me for any upcoming buyers. We would love to work with you, and we will see you guys in another week or two for our next class. Thanks so much, guys.